This is the only beginner's guide that you'll need to start day trading today. I've been trading for over 8 years and I've made millions of dollars doing it. And I've taught thousands of people how to turn this into a real career. Now you might think that day trading looks complicated or risky or even just like gambling, but honestly, the truth is that once you understand the systems and the mentality, it's actually very, very simple. So in this full course, I'm going to walk you step by step through exactly how to start. I'm going to give you the mindset tools. I'm going to give you the platform tools and all the platforms that you need. I'm also going to give you the simple strategy that I use every day to generate profits in the market. I'm also going to teach you how you can use other people's money to trade so you never have to risk your own. So by the end of this video, you'll have a clear plan to succeed with trading starting today. So stick with me and let's get into this. Now you might be wondering, who am I and why you should even listen to me? Well, my name is Joovier, and as I mentioned, I've been day trading for over 8 years. And day trading has honestly given me a life I never even thought was possible. I was able to buy my first home for over $1 million. I bought my wife her dream car. I bought my own dream car. And I've created financial freedom for not just myself, where I can buy everything that I want. I can live wherever I want. We live in Dubai for half the year. I honestly get to spend time exactly how I choose. And I thank God every day for allowing me to be able to learn this skill, because over the last 8 years, I've consistently made 7 figures just from trading. And because of that, I truly believe that everybody deserves to learn this skill, because it can completely change your life too. And that's honestly why I'm making this entire course completely for free. I want you to have the same exact roadmap that has not only set me free, but has also helped thousands of my students around the world do the same exact thing. And here's the best part. I'm going to keep it extremely simple, because when I first started, everybody made trading way too complicated. But after years of refining, I've been able to build this in a way that even a kid could understand. So grab a notebook, grab some water, and get ready, because by the end of this video, you'll have everything that you need to start your journey to becoming a consistently profitable day trader, and maybe even changing the course of your entire life in the process. Let's get into this. Now, first of all, let's address some myths that you've probably heard about day trading. The first one being that day trading is hard. That is not true at all. It can be complicated. It can be overcomplicated by people that don't really know what they're doing. But when you understand day trading and what it is, it's actually very, very simple. It's all about data. It's all about following proven systems. And it's all about staying consistent. Other than that, learning how to day trade, as you'll see inside this video, is not that hard. Now, you've probably also heard that day trading is gambling, and that's also not true. When you're trading with a proven system and you know exactly what you're doing, you have proper risk management, and you know the systems that you're following, you have a set of rules and a solid trading plan, trading is not gambling. Now, if you're just randomly buying and selling or hopping into trades, yes, it's gambling. But true profitable trading, which is what I'm going to be teaching you in this video, is not gambling. And you've probably also heard that you need a whole bunch of money to start day trading. And that's honestly the benefit of day trading, because you don't need a large amount of capital. And in this video, I'm going to show you guys ways where you can actually use other people's money so you don't have to risk your own money. But you can get started day trading with as little as $50, $100, $500. It's really up to you. You don't not need $100,000 to get into day trading. You don't need $20,000 to get into day trading. You can day trade with, like I said, as little as $50. Now, another huge myth that you've probably heard is that day trading is very, very risky. And that's simply not true when you actually know what you're doing. Now, yes, it can be risky if you're not following a proven system, if you're just gambling in and out of trades, if you don't have a solid trading plan. But what we're gonna go over inside this video is how I turn trading into something that some people would see as risky, into something that is safe for me to personally trust to make consistent profits for myself. Once you have a solid trading strategy with a proven trading plan and a set of rules, a lot of that risk is taken off the table, and that's what's allowed me to be able to be consistently profitable without having to live in a risky world of day trading. Now, you might hear me say day trading, but you might not know exactly what it is. So in simple, day trading is getting in and out of trades within 1 day. You've probably heard your parents or grandparents or aunts or uncles talk about buying stocks and holding it for weeks or months or years, or just consistently investing into the S&P 500 and holding it until you retire. That's regular trading. Day trading is faster paced. We are hopping in and out of trades within sometimes a couple of minutes, where we're entering a trade and closing it out for profit. It could be a couple of hours, or it can be by the end of the day. but most of the time we're not holding trades longer than 4 to 5 hours a day. That's what allows us to be able to make bigger profits using leverage in day trading. Now, there are multiple different markets that you can actually trade. You can trade crypto, you can trade Forex, you can trade the regular stock market, you could trade options, and you could trade futures. They all have their pros and cons. And even though in this video, we're gonna focus on mostly trading futures, you can also use the same principles that we go over inside this video in the crypto market, in the options market, in the stock market, in the Forex market. And I know that because that's what I do. I trade crypto, I trade Forex, I trade stocks, I trade options, and I trade futures. But futures for me is the best for beginners. And the reason being is that there's a low barrier for entry. Like I said, you can start with as little as $50. It's completely regulated, so you can actually find legitimate brokers that won't run off with your money. It's much simpler than, let's say, options trading, where you have to deal with Greeks and the things like that. Overall, I just believe futures trading is one of the best markets to get into for beginners. So that's what we're going to focus this video on. Plus, I mainly trade futures, and trading futures has been what's allowed me to make multiple 7 figures. Now, I know that when you think about day trading, you want to jump straight into the meat of it. You want to jump straight into learning the strategies, what platforms to use, the charting platforms, how to actually make money day trading. But I have to tell you the truth. Now, I've been trading for over 8 years, and I've been able to help tens of thousands of people learn how to trade. And the truth is that it's not that hard to learn how to read candlesticks. It's not that hard to look at a strategy and copy a strategy. It's not that hard to learn what platforms you should trade. And we're going to get into all this inside this video. But what I want to tell you guys is that the most important part and the hardest part that most people struggle with, 99% of people struggle with, is the psychology and the mindset in trading, because that's what ends up holding people back. You're going to see in this video, I'm going to give you guys the strategy that I use. I'm going to show you guys how to read charts, the platforms. I'm going to show you guys everything you need to know. And you can honestly learn all that within an hour or 2 hours. But the psychological part and the mindset part is what takes people years to master. And that's only then, when they master that, is when they can actually become consistently profitable. So what does mastering your psychology look like? And what are some key pitfalls that you have to watch out for as a beginner trader? First of all, your emotions are not your friend when it comes to trading. If you have a proven strategy, you have a set of trading rules, and you have proper risk management, that's what you should be following when it comes into trading. Your emotions will lie to you. As soon as you're about to get into a trade, they'll lie and say, oh, you should risk 10 times more than you usually risk because this trade is definitely going to work out. There's never a 100% win rate or a 100% chance that a trade is going to play out. So you should never be trusting your emotions to lead you astray. That's just some things that your emotions will do. Other times, your emotions will tell you that, oh, maybe you shouldn't hop into this trade. Even though everything aligned with your strategy, you could just be scared of hopping into a trade. And that will stop you and force you to miss out on trades that would have won, all because you let your emotions talk you into doing something that you're not supposed to do. Also, if you have no trading plan, which we're going to go over this video, what that is and how to build that. But if you have no trading plan, you're gambling. You're throwing money into the toilet and flushing it down every single time you enter a trade. You're not going to see consistency if you do not have a trading plan, because although trading is one of the best things in the world because it gives you freedom, financial freedom, time freedom, and location freedom, that's also one of the biggest downfalls. It's because you have freedom. You don't have anybody looking over your shoulder. You don't have a boss. You don't have a coworker. You don't have your freaking cousin holding you accountable to doing what you're supposed to be doing. It's just you and the charts. And if you're not disciplined enough to put your emotions in check, if you're not disciplined enough to follow your trading plan, if you're not disciplined enough to follow your trading rules, there's nobody holding you accountable to do it. So you will continue to make the same exact mistakes. I've seen this time and time again. I've mentioned to you guys, I've been able to help tens of thousands of people get started trading and get started consistently making profits. And the biggest downfall that I see 99% of the time is that they continue to make the same mistakes over and over and over again. And they know what they're doing wrong, and they know they're not following their trading rules. They're not following the strategy how it's supposed to be followed. They know they're doing that wrong, but they just can't be disciplined enough to stop. So I want to make it plain and clear for you guys that you need to trust the strategy, trust your trading plan and your set of rules Do not trust your emotions. You have to treat trading like a business. This is not a hobby. This is not something where you just come on the charts randomly, you press buy, you press sell, and you make a couple hundred or a couple $1,000s. This is a business. You need to treat it as such and have structure. You also need to manage your risk. I'll explain what that looks like in detail when we get into the actual trading part of this video. But in simple, managing your risk is having predetermined risk amounts, knowing that, okay, if I'm taking this trade, the max amount I want to risk on this trade is, for example, $500. Not letting it go past that. You going and having control over your risk and having a predetermined risk amount, that's what allows you to continue to trade. And that's because we need to live to trade another day. We cannot have 5 winning days in a row. And with one day where we did not manage our risk, we ended up losing all the profits from the previous 5 days. That happens time and time again. And I'm telling you guys, that is completely avoidable if you just make sure that you're always managing your risk. As I mentioned, you need to live to trade another day. And that's because when it comes to trading, we're not looking at each individual trade. We're looking at data. I told you guys in the beginning of this video, trading is all about having data. We're looking at the data of 10, 50, 100, even 500 trades. We're not looking at one individual trade. The reason being is that when it comes to trading and consistently making profits with trading, you're consistently profitable over a period of a large amount of numbers. For example, if you flip a coin, you know it's a heads and then there's tails. You have a 50% chance of landing on heads and a 50% chance of landing on tails. If you flip a penny right now 10 times, I am almost 100% sure that you will not land on heads 5 times and land on tails 5 times. It's probably gonna be like heads 7 times and tails 3 times. So tails 4 times and heads 6 times. But when you get to, let's say 100 flips, it's gonna be closer to 50 times that it landed on heads and 50 times that it landed on tails. And obviously when you get to about 1,000 flips, then it's really gonna be super close to 50 times or 500 times it landed on heads and 500 times it landed on tails. With that being said, when you have large amounts of trades or coin flips in this example, that's when you actually see the true percentages. So you can have a 80% win rate strategy, but if you take 10 trades, you might not win 8 out of those 10 trades just because you have an 80% win rate strategy. You'd have to get to about 50 trades or 100 trades until you start realizing that 80% win rate. So that's why it's important that we manage our risk so we can make it to those 20, 30, 40, and 50 trade amounts. And the last point I want to talk about when it comes to your psychology and mastering your psychology is falling in love with patience and discipline. Trust me, I know the feeling. 8 years ago when I first started off trading, I wanted to get this as fast as possible. I wanted to start making money as fast as possible. I wanted everything as fast as possible. I had no patience at all. And because I had that mindset, me rushing to get profitable actually made me take longer to get profitable. Me now as a 7-figure profitable trader, I have realized that having patience and having discipline is the 2 most important metrics that you need in your trading. You need to be patient enough to wait for your strategy to happen. We're gonna go over the strategy that I use every day later on inside of this video, but with that strategy, there's a checklist, meaning it has to do these 7 things. If it doesn't do those things, then I won't take the trade. And it takes patience to wait for those 7 things to occur for me to take the trade, but you need that. You also need discipline. We talked about it multiple times. Discipline to follow your trading plan, discipline to follow your trading rules, and discipline to stick to that checklist and that strategy to have, as well as having discipline to have proper risk management to allow us to trade another day. So be very, very, very okay with being bored while you're trading. We're not here to have thrills. We're not here to treat this like the casino. We are here to make profits, and we need to be disciplined and we need to be patient enough. And discipline and patience can oftentimes seem boring, but boring is how I've been able to make consistent profits year over year. Now, hopefully you take the mental part of trading serious, because trust me, I was in your same shoes when I first was starting off learning how to trade. I skipped past the mental part. If I'm being honest, I skipped past every single YouTube video that had to do with mentality, but that's what made me have to wait years to become profitable. But once I realized how important it is, that's when I started becoming consistently profitable as a day trader. With that out the way, let's get into how we actually start day trading, as far as the platforms you need, the hardware you need, everything that you would need. Let's hop into that right now. So here we are on my screen. There are really only 2 things that you need to start trading futures. The first one is Tradevate. This is a broker. A broker is simply where we deposit our money And that's where we're actually trading from. When we're hitting buy or sell, we're doing that on a broker. And Tradeovate is a broker that I personally use right now to trade futures. It's super, super simple. All you'll do is log in here. I'll go over the platform for you guys so you guys understand exactly how to use the platform, but it's super, super simple. But like I said, we'll go over that a little bit later on inside of this video. This is the first thing you need. You need a broker, something to trade on. The next thing is called TradingView. TradingView is where we go and plan out our trades. That's where we plan out and see, okay, this is what we want to trade. This is where we want to enter at. This is where we want to exit out. This is just where we go to actually plan our trades that we're going to then execute on Tradeovate. Now, keep in mind, this right now I'm on my computer, but you can trade Tradeovate and use TradingView on your phone. As long you don't need a fancy computer either. A lot of people think you need like some high-tech supercomputer. As long as your computer has Wi-Fi and isn't like crazy slow, you're good. A laptop will work, a PC will work, a MacBook will work. Trading from your iPhone, trading from your iPad. There's a lot of people I know that trade straight from an iPad. So you don't need any crazy devices at all. You really just need something that has Wi-Fi, and basically every single PC or laptop or phone has Wi-Fi. And that's really all you need to get started. I'm going to put the links for all the things that I talk about inside the description of this video so that you guys can easily find it. It's going to have all the resources as far as the broker, TradingView, a trading journal, which is very, very, very important because you need to, I told you guys 100 times already, trading is all about tracking your data, and you're going to need a trading journal to do that. So I'll leave the trading journal that you should be using inside the description of this video. Everything that you're going to need, I'm going to leave the links for inside the description of this video. That way you have a very easy cheat sheet to go back to and make sure you have all the platforms and things like that. But let's hop into Tradeovate and show you guys exactly how to use Tradeovate really quickly. And then we'll go into TradingView and show you guys, get deep into my strategy, when to enter trades, when to exit trades, all the good stuff. All right, so once you create a Tradeovate account and log in for the first time, you're gonna be brought to this menu right here. Now you have a live trading environment where this is where you're actually gonna make money in the live markets. Then you have a market replay, which basically just lets you practice trading, and that's super, super useful as well. And then you have simulation trading, which is basically a demo account, meaning that you can enter into trades with fake money. Now, if you make money on this fake account, you don't make any money. This is just like a practice account as well. But what you're going to need to do, first of all, we're going to live trading right here, start trading. All right, so when you first log into your Tradeovate and you go to the live trading, this is what's gonna pop up. Now, it might look a little bit different. You're probably gonna see a bunch of things, but what I would suggest for you to do is press exit next to all like the modules that you're gonna see on your screen until your screen kind of looks like this. There's nothing there. Then in the top left corner, you can press add modules, and you're gonna see one that says charts right here. You'll drag this over onto your screen, release it, and then you'll see this search icon pop up. Now, when it comes to futures, there are 4 main futures that people usually trade. You can trade NQ, which is the NAS 100. You can trade ES, which is the S&P 500. You can trade YM, which is the Dow Jones. You can also trade GC, which is gold. Those are the 4 main things that most futures traders actually trade. And they all have different personalities and different strategies for them. In this video, we're gonna go over a strategy that works amazing with NQ. So in this instance, let's say we type in NQ right here. We'll type in NQ. You'll see a bunch of them pop up. These all change every 3 months. It's going to change. Like for instance, this one's going to change from U to Z. Then after 3 months, it's going to change from Z to H, then H to M, and so on and so on and so on. But you don't really have to worry about that right now. Just type in the ticker. Ticker simply means NQ or ES or YM. Just type in the ticker that you're looking to trade or see the chart of. In this instance, we'll say NQ, and just click the first one that's at the top because that's the most recent one, the current one that we're on right now. So we'll press NQ U5. We'll use default settings, right? Then you'll see a chart pop up just like this. You'll see buy market, sell market, buy, bid, sell, ask. You'll see all these numbers. We're gonna go over all that in a second, but what you first need to do is you actually need to go into your settings over here, and you're going to need to get market data subscription, because what will end up happening is when you first create an account on Tradeovate, you won't have real-time data. I'm just gonna double click this right here so it lengthens them out. But when you first sign up for Tradeovate, you're not gonna have real-time data, which means you'll be 15 minutes behind. So right now it is 11:39 in the morning, but if I didn't have a Tradeovate account already, it would only show me what was happening at like 11:20. It wouldn't show me what's happening currently right now, and that's because we need to buy market data. And simply how you do that, you go to application settings right here, and you're gonna go to subscriptions right here, and then you wanna scroll down to market data. And you're gonna go to here, it should say add subscription. For me, it says update subscription because I already obviously have a subscription. Update subscription, and you're going to, I personally suggest for people to get the CMA group bundle because that gives you access to all of the different things that we talked about, all the different tickers that we talked about, NQ, ES, YM, and GC. And I believe it's about $7 a month. That's the only one that you need. And once you subscribe for that market data subscription, then you'll have all the data that you need. Now let's run through how to use Tradeovate. I told you guys on Tradeovate, all I do on here is actually enter my trades. I plan out all my trades on TradingView, which we're gonna go over in a second. But on Tradeovate, I just plan out my trades. But I want to show you guys how to actually, on Tradeovate, sorry, I just enter my trades. But I want to show you guys how you enter into your trades. So first of all, I just exit this out. The main things that you're going to be using is buy market and sell market. Over here, you can hover over here and you'll see a bunch of different like drawing tools. You can draw lines if you want on your charts. You can do anything you want really over here. You have a zoom in button and zoom out button. Right here is time period. We're going to get into all that when we go on TradingView as far as what a time period is, what these are. These are what we call, well, not these specifically, but what you'll see default is what we call candlesticks like this. These are all candlesticks. We're going to go over what those are, how you understand them. I know right now it looks super complicated, but trust me, it's very, very simple. And I'm going to show you guys exactly how it is simple. But here you can see your time period. You can see what type of chart you want. So you can have a candlestick chart. You can have a line chart if you want to. You can have Heikin-Ashi candlesticks. You can do all different types of charts. You can have your chart settings right here and chart elements as far as indicators and things like that. Indicators simply just give you an edge. They just help you see more inside of the market. And we'll go over that inside this video as well. But I don't really use indicators too much at all. So all that is what you could do on Tradeovate itself if you wanted to mark up and plan out your charts straight from Tradeovate, but I don't do that. I do it on TradingView. So the only thing that I care about on Tradeovate is up here, which is buy market and sell market, because that's helping me actually enter into trades. And right here, you'll see a 1 number. This is simply just your position size. And all that means is how much of the underlying asset or how much of that ticker you're actually buying. Let's do this super simple analogy. Imagine Bitcoin, right? Imagine Bitcoin is only $100. And when Bitcoin is $100, I press buy and I have 1 here. So that would mean that I bought 1 Bitcoin. Now, if Bitcoin then, after I bought it, went from $100 to $110, I would have made $10. But let's say in this instance, instead of it being at 1, I bought 10 Bitcoin at $100, and then Bitcoin went to $110. I would have made $10 profit on 10 Bitcoin. So I would have made $100 versus making $10 because I only had 1 Bitcoin. Vice versa, you could make this 5. And for this analogy, we could imagine we bought 5 Bitcoin at $100 and it went to $110. I would have made $10 of profit per Bitcoin I bought, and I bought 5, so I would have made $50. That's a simple analogy. Same thing when it comes to NQ or any ticker that we talk about inside this video. The bigger your position size, the more money you can make. But you also have to realize the bigger your position size, the more money that you can lose. Because in that same Bitcoin analogy, if I bought 1 Bitcoin at $100 and it dropped down to $80, I would have lost $20. But if I bought 10 Bitcoin, I would have lost $200. So that's basically all this is. This is basically just your position size. So right now we'll leave that as at 1. And most of the time I don't touch buy bid or ask or sell ask. The cool thing about day trading though is that you'll see this sell market button right here. We can actually enter a sell position, which allows us to make money when price goes down. So if let's say price was up here and I thought price was going to drop down, I can press sell market, and as price drops down, I'm actually making money. And then I can press buy market, and once price is going up, I can actually make money when price is going up. So we can make money no matter if price is going up or down. That's one of the main benefits of being a day trader, because no matter what the market is doing, we can make money. Now there's a much simpler way to actually enter into trades when we go on TradingView here, and I'll show you guys exactly how it's done. But I just wanted to give you guys a quick rundown of getting that market data on Tradeovate, because that is very, very important If you don't have market data, you cannot trade. It will not allow you to trade. So you need to get that market data. And then you also need to understand how to use Tradovate. You need to understand the buy market, sell market, and then the position size. We call it contract sizes. All right, so now let's go over TradingView. So TradingView, as I told you guys before, is what I use to plan out my trades. This is where most traders come on to see exactly when they're going to buy or when they're going to sell or when they're going to just enter into trades. And then obviously we're executing and entering on Tradovate. So TradingView right now, you're going to have to create yourself an account, and you can get a free trial for it. They have free versions as well. But once you do that, you're going to be at this screen right here. And what you're going to want to do is hover over the products tab and go to super charts. Once you're on super charts, let's actually go to a chart right here. Once you're on super charts, it's then going to bring you to a screen that looks like this. And you can type in up here, you can type in anything that you want to trade. The same thing that we just went over on Tradovate. You can type in NQ, BS, GC, gold. You can type in really anything. You can type in Bitcoin. You can type in stocks like Tesla. You can type in really anything, and that'll bring up the chart for that specific thing. And the chart is important because this is how we know what price has done before and what price could potentially do. And that's all we're doing as traders. We're predicting what price will do based off of what price has done before. In this instance, we're on ES. Right here, it says E-mini S&P 500 futures, which is the long name for ES. Now, on here, you'll see a lot of similar things to Tradovate. I want to break it down for you guys so you guys understand exactly how to use TradingView. And then we're going to get into exactly what these candlesticks are, what this means, what this tells us, and how you can use this to predict what price is going to do next. So on this left panel, just starting off, you have a bunch of different drawing tools. So you have your crosshair right here, which basically just lets you kind of move the charts around when you click. You have your line here where you can draw lines. Keep in mind, your chart will probably be white background. If you right click on your screen and go to settings, under canvas, the background, you can change that color to whatever you want. I like my background to be black. You can make it green. You can make it yellow. You can make it white. I just like mine personally to be black. That's a personal preference. So that's why your chart might look slightly different than mine when you first come on here. But anyways, going down the line, if you actually hit the arrow next to a lot of these different things, more options will pop up. And these are all just drawing tools, which will be useful as you're planning out your trades and marking off specific areas that price has reacted a certain way at, and how you can use that to predict what price will do next. So there's a bunch of different things. You can go down all these lines, and you have drawing tools. You can draw on your screen if you want to. You can click here and actually go to rectangle and draw boxes. And then actually, if you heart anything or you favorite anything over here, you might see that I have a bunch of tools already over here. This is my favorites list, mainly just the things that I use most of the time. So instead of you having to search for it, you can actually search for it one time and hit the star next to it, and you'll notice that it pops up on the side over here. So that's how I have this little floating toolbar right here. But these are all just tools that you can use to draw on your charts. Now up here on the top of TradingView, you'll see what you're actually on. So right now I'm on ES. So you'll see exactly what chart you're looking at. You'll also see these times, right? And simply what these are time frames. Each of these candlesticks represents what's happened during a specific period of time. So in this analogy, the D stands for the daily time frame. So each of these candlesticks represents what's happened throughout one day. If you look on the bottom of my cursor to the bottom of the screen, down here, you'll see on the magnifying glass, you see it says Thursday, 04 September 2025. This candlestick represents what's happened today, the 4th of September 2025. If I go to the candlestick before it, this represents what happened on the 3rd of September. This represents what happens on the 2nd, the 1st, so on and so on and so on, because we're on the daily time frame. Now, if we go to, let's say, the 1H, which simply means the 1 hour time frame, we'll click it and you'll see the candlesticks change. You'll see that the candlesticks change, and each of these candlesticks actually represents what happened within 1 hour. So if you look on the bottom of the screen again, you see this says the 4th of September. This is at 11 a.m. The one before that is 10 a.m. The one before that is 9 a.m. And the one before that is 8 a.m. So these are all time frames. Like I said, you can hit this drop down right here actually and see a bunch of different time frames. You could do the 1 day chart, the 1 week chart, the 1 hour chart, 2 hour chart, 3 hour chart, 4 hour chart, even down to minutes. You can do the 1 minute chart. 5-minute chart, 10-minute. You can do all of these. You can even go to seconds charts as well. And all these mean is that if I click any of these, let's say I click the 5-minute time frame, each of these candlesticks is telling me what happened during a period of 5 minutes. Now, I know you see these all are different shapes and sizes. We're going to get into exactly what that means and what these long sticks at the top and the bodies and stuff like that mean. But I want to finish going over TradingView first to understand how to use TradingView. Now, over here, you'll see a drop down here. You can actually change the chart that you're on. Same way on TradeAbate, how you can go from a candlestick chart to, let's say, a line chart. You can go to a columns chart. You can go to Heikin-Ashi candlesticks chart. You can go to all these different things. But for right now, and what most people use, just regular candles chart. And that's how we have these candles. Next to that, you're going to see indicators, which I mentioned to you guys before. On TradeAbate, indicators simply just allow you to, they give you, basically, they compile what's happening on the chart into a different way for you to see it a little bit clearer. Some people use indicators, some people don't. I used indicators a lot when I first started off trading. The main indicator that I used is called the EMA. You're going to see if you click on indicators here and you type in EMA, you're going to see moving average exponential. That's the main indicator that I use, and simply all that indicator does, because I'm not going to dive too much into indicators, but simply all that indicator does, if you click it, you see this blue line pops up. It basically just tells you that if the candlesticks are above the EMA, that means price is going up, and you should be looking for buy opportunities. If price is below the EMA, like right here, where we see these candlesticks are below this blue line, that means that we should probably be looking for sells. And that's all the indicator does. But honestly, looking at the chart without the indicator, after a while, you can obviously see that the price is going up, so we should be looking for buys. But indicators just help you out a little bit. Just give it a little bit of a helping hand. Now we have a couple more tools up here that you don't really need to worry too much about. You can play around with it on your free time, but I'm not going to go too in depth with it. Now over here, you have a watch list. So let's say you're always trading NQ, ES, and YM. You can actually create a watch list so you can easily go through all of them and click them and the chart will change. And that's basically all you need to know about TradingView. That's how you actually use TradingView. Now, the most important part, candlesticks. What the heck are they? How do we use them? What are they telling us? And how can we use them to predict what the heck price is going to do next? All right, so here's my quick drawing. So I'm going to go through and explain what these candlesticks are. Here are candlesticks. You'll see we have green candlesticks, red candlesticks, green candlesticks, as you see on a regular chart. Green candlesticks usually mean that price is going up. Red candlesticks mean that price went down. Green candlesticks means that price went up. Now you'll see that we have a thicker part and we have a skinny part. The skinny part is called the wick of the candlestick. You'll see wicks on the top and the bottom of candlesticks. The thicker part is called the body. So we have the wick and we have the body of the candlestick. Now I mentioned to you guys that each one of these candlesticks represents what's happened during a period of time. So let's say, for instance, this is 1 p.m., right? Let's say this is 1 p.m., right? This candlestick right here is 1 p.m. Let's say we're on the hourly chart. So then that would mean that the next candlestick would then be, let's edit this. The next candlestick would then be 2 p.m., right? Then that next candlestick would be 3 p.m., sorry. So this is the 1 p.m. candlestick, this is a 2 p.m. candlestick, and this is a 3 p.m. candlestick in this analogy. The body of the candlestick on a green candlestick, the bottom of the body, which is the thicker part, is where price started at. So at 1 p.m. on the dot, price was right here. If you look on the right of my cursor, right, you'll see it says 6,500.75. So for this analogy, at 1 o'clock, ES, which is the ticker that won right now, the price of it was 6,500.75. That's where it started. And the top of a bullish candlestick, bullish means that price went up, bearish means that price went down. So in a top of a green / a bullish candlestick is where price ended at. So it started down here at 1 o'clock. This is where price was. And then at 1:59 and 59 seconds, price ended up here at, let's say, 6,513.50, right? So that's where price started at, and that's where price ended at. That's the body. That's what the body shows us. The wick shows us where price has been all throughout that time. So even though price started here and price ended here, at one point during 1 o'clock, well, at one point during the period of 1 o'clock till 2 o'clock, price was up here, it was up here, it was up here, it was up here, it was down here, it was down here. That's what the wicks are showing us. The wicks are showing us the places that price has been throughout this time. So on this 1 o'clock candlestick, this candlestick is from 1 o'clock until 2 o'clock. During that time, the highest point it went was up here, and the lowest point it went was right here. But the body, this is where it started at. The bottom of the body is where it started at, and the top of the body is where it ended at. That's for bullish candlesticks. Now going on to the next candlestick. So let's say 2 o'clock started. As we know, this is where price ended on the candlestick before it. This is the candlestick after it. For a bearish candlestick, which would be a red candlestick, it's flipped. So the top of the body is where price started at, and the bottom of the body is where price ended at. And then the wick means the same exact thing. The wick is simply showing us where price has been throughout this entirety of this 2 o'clock candlestick. So price was all in this area. Price was also all in this area. That's showing us exactly what happened. And then obviously the next candlestick after that, in this instance, is another green candlestick, which is another bullish candlestick. Price started down here because on bullish candlesticks / green candlesticks, price starts at the bottom of the candlestick, of the body of the candlestick, and it ends at the top of the body. And then you see in this instance, price was all the way down here as well, and price was all the way up here. And that's simply what candlesticks are showing us. They're telling us the story of what price has done, where price has been throughout a specific time period. It doesn't matter if you're on the hourly time frame, the 5-minute time frame, the candlesticks mean the same exact thing. The body tells us where price opened and closed at, and the wick shows us where price has been throughout it. Now, the reason why that's so important is because looking at certain candlesticks, we're able to actually tell what might happen next. And all of that is based off the shapes and the sizes of each candlestick. There are certain candlesticks like this one right here. If you see a candlestick with a little skinny body, but long wicks on the top and long wicks on the bottom, that simply just shows uncertainty. This right here is called a doji candlestick. When you see a candlestick with a super skinny body, but long wicks on the top of the bottom, that's uncertainty. And all uncertainty means is that if price was just going down and then we got a doji candlestick right here, most likely we're going to start going up. And you'll see a lot of examples of that on the charts, and we'll go over that in a second here. But I just want to make sure that you guys understand what candlesticks are, and so you're not confused by it. So if we look on a regular chart here, you see they're all different shapes and sizes. You see the bodies are different. The wicks are different. But now that you understand that analogy, you know that, okay, with this green candlestick, right, for instance, this green candlestick right here, price started right here and price ended up here. At one point, it was all the way down here, but it ended up ending up here. Then that next candlestick started, which is this red candlestick. The top is where price started at. The bottom is where price ended at. We have wicks that are at the top and at the bottom. It all means the same exact thing. It's just showing us more stories and giving us a clear picture of exactly what's happening during this period. Now, right now, I'm actually on the 5-minute time frame. So each of these candlesticks represents what's happened in 5 minutes. But if I go to the hourly time frame, you'll see the same exact things. You'll see the bodies, you'll see the wicks. And that's all candlesticks are. It's just, like I said, just showing us the picture, telling us what price has done within a certain period of time. Now, the cool thing is the strategy that I'm about to go over that I use every day is extremely simple. As long as you understand the concept that I just went over, this strategy is amazing. I'm going to break it down for you guys really quickly. You only need a few things. So let's hop into that checklist. All right. So here we are on my 8-step checklist for my NQ London 5-minute breakout strategy. I'm going to go through all these different steps really quickly. Then I'm going to show you it on the charts because a lot of this probably won't make sense until I show you how to do it. But trust me, it's very, very simple. This strategy has absolutely printed me money. This is just for the month of July at $1,000 account. And I was able to make $3,270 with this one strategy in just the month of July using just a $1,000 account. If I use a $10,000 account, I could have made obviously a lot more. This is just with a $1,000 account. The results actually speak for itself. As you've seen, it's been able to make me a good amount of money with a very, very small amount of money, which goes to show that you don't need a lot of money to make a lot of money with trading. And we're going to go into later on in this video how you can actually use other people's money to actually make more than this with less money at risk actually. But this strategy has absolutely printed. Now, the first thing you're going to realize is that it's called the NQ London 5-minute breakout strategy. We're going to be on the ticker NQ. So you're going to want to hit that top left corner. You're going to want to type in NQ, right? Then you're going to be on the chart. The next thing you have to realize is that trading has sessions. So there's the New York session, there's the London session, and there's the Asia session. As you see, the session is broken up into multiple different hours. Now, the reason it's called the London 5-minute breakout strategy is because we're trading based off of what happened during the London session, which starts at 4 a.m. We want to see the price action and what the candlesticks did between when London session started and then when New York session started. London session starts at 4 a.m. New York session starts at 9 a.m. So that's the next step. First step is be on NQ. The next step is understand there are sessions, and we actually want to set the high and the low of the London session. It's actually a very, very simple way to do that using an indicator, and I'm going to show you guys how to do that in a second. But what you could also do if you wanted to do it manually was just set the highest candlestick. You can set a line or a box. Like I said, we're going to go over this. I'm going to show you guys exactly how to do it live on the charts in a second after we go through this quick walkthrough. But you want to set the highest point and the lowest point that happened between the hours of 4 a.m. and 9 a.m. Eastern Standard Time. Next, you're going to wait for a 5-minute candle body close above or below that highest point or that lowest point that you just marked off. So we have to do this on the 5-minute time frame. We're looking for a breakout, which simply means that price is breaking very, very fast, or price is going very, very fast in a specific direction. That's what we are looking for. So we're always going to be on the 5-minute time frame. So that's why this is called the 5-minute breakout strategy. So as I mentioned, you're going to wait for a 5-minute candle body to close above or below that higher low. So you want the body of the candlestick. Remember, that's the thicker part of the candlestick. You want that to close above the highest point or close below the lowest point. And when it does that, you're going to enter into the trade as soon as that candlestick closes. Now, keep in mind, I only enter into trades after 9:30 Eastern Standard Time. And that's due to the fact that at 9:30, that's when the stock market opens. And you'll notice that the market goes absolutely crazy. It's going to be a whole lot of weird price action. Pricing just shoot up quickly or shoot down quickly. And that's because the stock market opens. So I like to avoid entering before that happens because you never know what can happen. And next, you're going to put your stop loss, which your stop loss is very, very important. I'm going to show you exactly how to do that. But you're going to put your stop loss, which is basically telling you if price hits here, get me out the trade. I'm okay losing this money. I'm having proper risk management. Take me out the trade if it gets here, because if it gets here, I was probably wrong about the trade. It's probably not going to go in my direction. So I'd rather cut my losses right here. It's very important that you trade with a stop loss. But with this strategy, you're going to put your stop loss just above / below the candle that you entered on. And I'll show you guys exactly how to do this in a second, like I said. And then your take profit, which is the opposite of a stop loss. So a stop loss is take you out at a loss, because that's you using proper risk management and basically saying, okay, if price gets, let's say right here, take me out this trade before I end up losing more money, right? The take profit is different. The take profit is a place where you say, okay, if price gets right here, take me out the trade. That's how much money I wanted to make. I'm okay with exiting the trade right there and taking my profits. Now, the take profit, like I said, is always going to go for a 2-to-1. And simply all that means is you're going to go for a 2-to-1 risk to reward ratio. That means that if you risk, let's say $10, you're going to make $20. So every time you win a trade, you're winning 2 times as much as you lost. And I'll show you how to do that calculations and what that looks like. But having a 2-to-1 risk to reward ratio allows us to actually lose more trades than we actually win, and we're still profitable. Like, you can lose 2 trades in a row and win 1 trade, but because we're always winning 2 times as much as we lose every time we win, we're making all of our money back in 1 trade. So you don't have to win every single trade, which is amazing. And that's why this strategy is great. The 7th rule on the checklist is to only take 1 entry per day. So let's say price closes above the London high point and we enter to the trade, and let's say it loses. And then it goes down to the bottom of London and closes below there. We wouldn't take that second trade. We can only take 1 trade per day, whichever one happens first. And then a rule number 8 is very important. We're not able to take any trades after 11 a.m. Eastern Standard Time. And that's because I mentioned this strategy is all about going where volume is going where price is moving extremely fast. And price starts to slow down after around 11 a.m. So I just don't look for any trades after that time. So let's run through this on the chart so you see exactly what we're talking about. Right now, we're already on the NQ chart. And what we're going to do, I told you guys it's a simple way of doing this. What we're going to do is actually go to indicators right here, because we need to mark off our highs and our lows. We want to go to indicators here, and we actually want to type in kill zones. You're going to see kill zones right here by this person named Oscar VS. You're going to click that. You're going to notice on your charts that these lines pop up. Now, keep in mind, these lines are probably going to look different. Your chart's probably going to look super different, right? Because I've changed the settings on these kill zones. So what you can do is copy my settings. So over here, if you see a drop down in the top left corner, press that drop down. You're going to see kill zones, and you want to hit this gear icon right here. That's going to bring up the settings, and you can just copy all the settings that I have. So under inputs, all I have is New York kill zone on and London kill zone on. I have everything else checked off. You can keep inputs in status line checked as well. And then under style, all I did, I changed the color of some of these, but all I have is the first two clicked, and then the second to last one is checked on as well. And that's it. Visibility, I haven't changed anything here. So once you do that, your chart should look basically the same. You can change the color here as well if you want, and the opacity to match mine if you want. And then you press OK. But the reason why we want this is because this shows us from the yellow line until the white line. That's that time from London session start until New York session starts. And remember, we're taking a trade and we need to mark off our charts right here. Step number 2 is to set the high and the low of the London session in between the New York session. So we need to mark off the highest point during this time and the lowest point during that time. And that's very, very easy to do. So what we can do is come to our tools over here, and you can either, what I personally like doing is hovering over the text and pressing the drop down menu and going to the, sorry, not the text, hovering over the, over here, drop down menu and pressing rectangle, right? And I'll drag this box from the lowest point. So the lowest point is right here. I'll click and drag to the highest point. The highest point is up here, because remember, the wicks are telling us exactly where price has been throughout this candlestick. We're on the 5-minute time frame. So this wick is the lowest that price has been. You can drag the backs right there. Then the highest point of the wick has been up here. Another way you can do it is if you just use the line tool. You can actually use this tool called the horizontal ray. And you actually just click at the top of it. It'll draw a line. Then you can do it again. Click at the bottom and it'll draw a line. Now this, once we've done that, we've marked off we've done step 2, which is to set the high and the low of the London session, because we're looking for the high and the low of what happened between when the yellow line started and the white line started. Once we've done that, next we're going to wait for a 5-minute candle body to close above or below the high or the low. So this is our high, this is our low. We're waiting for a candlestick to close below it. We want the body of the candlestick to close below it. We don't care if the wick goes below it. We don't care if any of the wicks go below it. We need the body of the candlestick, which is, remember, the thick part of the candlestick. We need that to close below the lowest point or above the highest point. In this instance, as you see, we have this candlestick right here where we got the body of the candlestick to close below the low of London. And this is what would trigger an entry. Now, I told you guys that on TradingView, this is what we use to plan out our trades and see exactly what we're going to do. So a tool that's on here, a drawing that's on TradingView, what it allows you to do is over here, you're going to see long position. If you hit the arrow next to it, you'll see long position and short position. These two tools, I have them up here on my favorites list. So I'm going to be clicking over here. But long position, it simply means you're planning out a buy position. You're planning on price going up. So if price had broke above here and we were looking at entering a buy, we would use a long position tool. If price is closing down here, which it is right now, we would go and hit that short position tool. Short simply means that we think price is going down. Buy simply means that we think price is going up. And all we would do is hit that short position. And once we press it, we're able to click exactly where we would have entered at. Remember, we're entering as soon as this candlestick closes. And on red candlesticks, the bottom of the candlestick is where price closed at. So we'd click on the bottom of the body of the candlestick. That would be our entry, right? This drawing tool helps us plan out our trades. It shows us our risk. It shows us all the price movement. It also shows us our risk to reward ratio, which we'll get into a second, because you guys remember on the checklist, it has to say 2. Right now it says 1. So the next step is to actually take that entry, which you would have taken that entry. And next is put our stop loss just above / below the candle that triggered entry. So this candle that we entered on, that's what triggered our entry. So we drag our stop loss, which is the red part of it. The red part is our stop loss. We drag that, as you can see, we can drag it up or down. We drag it right above that candlestick, the entirety of that candlestick. So not just above the body. We want above that wick too that we entered on for a sell. Then it's vice versa. If we enter for a buy, we drag it below the candle that we got entered on. So now we have our stop loss placed. Next is we need to make our take profit a 2-to-1. So if you hover over your short position tool in this instance, you hover over it, you see it says a 1 point, it could say whatever, 1 point whatever. It can say less than that too. It can say a point whatever. But you want to drag this down until that number says a 2-to-1 risk to reward ratio. Right now this says risk to reward ratio 2.01. It can be exact if you want it to, right here. That says a flat exact 2-to-1 risk to reward ratio. This is where we would exit the trade out when price gets down here. Now, if price had entered us into the trade right here, and then it dropped down, and then let's say it bought up and hit our stop loss, we would get taken out the trade at a loss, which is perfectly fine because not every trade is going to win. You see with the statistics for July, I had a 44% win rate. So I didn't win every single trade, obviously, but as you see, I was still able to make over $3,000 of profit with less than $1,000 inside of my account. So you're going to end up losing, which is perfectly fine. It's all part of the process. You can't go into trading thinking that you're going to win every single trade. But as long as you have proper risk management and you are consistent with following your checklist, it will pay off and consistently generate profits over a period of time. So as you see, this is exactly how the trade would have played out. We would have entered here. Stop loss would have been above here. Take profit would have been at a 2-to-1. So as soon as price had gotten here to the bottom of the green shadow, that's when we would have been taken out of the trade. But keep in mind, this drawing is just a drawing. This doesn't actually enter us into a trade at all. We'd have to then, this is how we plan out our trade, right? This is how we plan it out. We'd have to then go to Tradeovate. And in this instance, we're entering for a sell. So what we do is we'd press sell market right here. And then we can watch our trade to see if price, if you click on your short position tool or the long position tool, if you were in a buy, if you click on it, you'll see on the sides that it's going to be highlighted and tell you the number where your stop loss is. So the red right here means that my stop loss is at 23,645. My take profit is at 23,498. What you can actually do is as soon as Tradeovate then, because you'd be inside the trade here. Let me go to regular candlesticks. You would be inside the trade here. If you see the numbers right here gets to that same number that shows you either the stop loss number or the take profit number, you can press exit at market and close. This will close all of your positions, and this will allow for you to have exited your trade fully. Now, there's actually an easier way of doing this, and I'll show you guys exactly how to do that in a second. But I just want to make sure that you guys understand this strategy. So we went through the entire step checklist. We're on NQ. We set the high and low with the London session. We used the indicator to help us do that, the kill zones indicator. We marked it off, right? And then we waited for a 5-minute candle body to close above / below the high or the low. In this instance, it closed below. We entered for and sell. And then the stop loss, we put it just above the candlestick that we entered in because we entered for sell. If we were entering for a buy, we put our stop loss right below the candle that we entered on. Then we're always going for a 2-to-1 risk to reward ratio for our take profit. And we're only taking 1 entry per day. And we don't take any trades after 11 a.m. Eastern Standard Time, which we followed every single one of these rules. And as you see, it played out. Now, this strategy is super, super simple, right? You follow this checklist. There's no guesswork. There's none of that. You mark off your highs, you mark off your lows, you wait for the body to close below it. Now, this strategy has printed me a crazy amount of money on my real account, not on a small 1K account. It's printed me a crazy amount of money, as you can see on the screen right now, just by following the same systematic, simple strategy. Now, this specific trade was actually taken inside of my inner circle. If you don't know what my inner circle is, it is where I take you and I handhold you and mentor you to be able to trade exactly how I trade. You don't only get mentored and get all of my educational resources and material and courses, but you also get to trade live with me every single day. Meaning that when I enter a trade, you can enter that same trade. When I exit a trade, you can exit that same exact trade. We also have 4 other profitable coaches in there as well who live trade and share their trade ideas as well. We also have a dedicated trading psychologist, meaning I mentioned in the beginning of this video that the mental part of trading is the hardest part. And that's why in my inner circle, I wanted to equip everybody with everything that you need to become an extremely profitable trader as fast as possible. So we have a dedicated trading psychologist that will help you on your trading journey to make sure that the mental issue and problem and the mental challenge of trading is never a real challenge for you. In my inner circle, it's literally built for people who actually want to take trading serious. It's not for people who just want to make a couple $100s. It's not for people who want to make take this as a hobby. It's for serious people who want to be able to turn this into a full-time income and make 5 to 6 figures every single month with day trading. No matter if you're a complete beginner, no matter if you're experienced and you're just not profitable, no matter if you're profitable and want to scale from just making a couple $1,000s a month to being able to make 5 to 6 figures potentially a month with trading. That's what my inner circle is for. I'll leave a link for it inside the description down below, but it's only for serious people. And you're probably going to notice if you've seen any of my other YouTube videos, if you go to the comment section, there's going to be a bunch of people complaining about that there's no spots left. And that's because I don't take on everybody. Like I mentioned 30 times at this point, my inner circle is only for people who are actually serious, people who want to take this serious. You can be a complete beginner that doesn't know anything, but you have to have the drive and the mentality to want to take this serious to actually see results with it. So if you actually want to trade and be able to generate consistent profits, I suggest you click the link inside the description down below to have the opportunity to join my inner circle, to trade live with me, to take the same trades that I take and 4 other profitable traders take every single day, get access to our trading psychologists, and all the other resources that I give to you guys to help fast track your journey to becoming a profitable trader. Like I said, hit the link for it inside the description down below. All right, now let's go over a couple more examples to make sure that you guys actually understand exactly what it is that you're doing. So here is a whole nother day. Right now I'm on a replay feature, which allows me to go back in time and kind of practice trading. But I'm just using this to show a bunch of examples to you guys to make sure that you guys actually understand what you are doing. So here we have our indicator. We see the yellow line, we see the white line. So we want to mark off the bottom, and we also want to mark off the top, the highest point, right? Next, we're just going to wait for a candlestick to come and close above or below that line. So here we actually see a candlestick that closed below it. It didn't close too far below it, so I'll probably just wait for the next candlestick here. And this candlestick right here now closed below it. So we can enter right here for a sell. We'd use our short position tool. We drag our stop loss above that candlestick that we entered on. And then we're dragging this until that risk to reward ratio says a 2. So we're dragging it. Now it's at a 2. Now we can see how this trade plays out. Let's fast forward. Price sells down and continues to sell down, and we would have then won this trade. And this would have happened within the matter of 10 minutes. We would have won this trade. Super simple. We did the same exact thing. We waited for it to break the low or the high and get a close of the body. This first one, it did technically close below it, but it didn't close that far out of it. If we had taken the same trade and entered it, we still would have won. But I wanted to wait just a little bit more to actually get a better close outside of it, which is what I did. Entered the trade, went for our 2-to-1, exited the trade, and it worked out perfectly. Let's go through another example. All right, so here's another example. What we're going to do, same exact thing. We're on the 5-minute time frame. We see our yellow line and our white line. Let's mark off the high, and let's mark off the low between this period. That's our high and our low. Next, we're just waiting for an entry, right? We're waiting for price to close above/below those lines. So right here, we have a close above it. We would have entered right here for a buy. Stops would have been below the candlestick that we entered on. And our take profit would be dragging it until it says a 2-to-1. Right here, risk to reward ratio says 2-to-1. Let's see how this plays out. It's going up, and it just tapped us out, and we would have won this trade for a 2-to-1. As you see, this setup happens. It gives you the opportunity, as long as you're patient enough and follow the checklist. This strategy can absolutely generate consistent profits, as it has done for me. Now, this simple strategy has absolutely changed my life and has allowed me to generate consistent profits. And as you guys saw, I didn't need a lot of money to do it. But I told you guys that I would let you guys in on a little known secret that actually allows you to use other people's money to trade with. And that is called a prop firm. A prop firm, aka a funded account, is basically a company that would allow you to take a challenge, and if you pass that challenge and prove to them that you can actually trade, they will fund you with money to trade with, and you get to keep a high percentage of that money. Most of the time, like 80 or 90%. And the reason why that's so amazing is because you can pay a small fee, like let's say $500. You can pay that small fee. You can take a challenge that proves to them that you know how to trade. And once you prove to them that you know how to trade, they will give you access to, let's say you pay that $500, you get access to a $100,000 account to trade with. Now, you cannot withdraw that $100,000, but the profits you make on top of that account, you can withdraw a percentage of it. So let's say that $100,000 account, and you trade that and you get it to $110,000 using all of their money. You get to take out 80 to 90% of that. So let's say you made 10K profit on that account, you get to take out $8,000 to $9,000 and you put that right into your bank account. Now let's say the flip side of it. Let's say you pay them the $500, you prove to them that you know how to trade, and they give you that $100,000 account. And let's say you lose $10,000 on that account. You don't owe them anything. The only money out of pocket for you is that initial fee that you paid in the beginning to actually take the challenge. Now, the reason why most people don't use this is because most people don't even know about it. I didn't know about it when I first started off trading. I was risking and losing all of my own money. In the beginning of my trading, I lost upwards of $60,000 within a few weeks. And that's because I didn't know what the heck I was doing. I didn't care about my psychology. And I was really treating trading as gambling. But if I had known about prop firms, I could have leveraged other people's money and been able to actually use other people's money without risking my own money. And that's one of the huge benefits of prop firms / funded accounts. It allows you, once you actually have a strategy that you're consistent with, it allows you to scale that strategy up, use other people's money to actually generate real profits. A lot of people don't have $100,000 to put into an account to then leverage to make $5, $10, $15, even like $20,000 a month with that $100,000 account. But now with funded accounts, you don't even need that. You can pay, like I said, $500, $300, $600 and get access to 25K accounts, 50K accounts, 100K accounts, all the way up to $150,000 accounts for you to use to trade with, to use other people's money to leverage and make more money using the same exact strategy that you're already using. Now, there are rules. As I mentioned, you have to pass the challenge and prove to them that you know how to trade. And basically how you do that is you make a certain amount of money on a fake account. Let's say you make $6,000 on a fake account without losing $3,000 first. That's most of the time, that's kind of how it is. You have to hit a certain profit target without losing a certain amount of money. And then once you do that, you've proved to them that you know how to trade. And then there's also other rules that you have to follow. Like you can't trade between certain hours. You can't trade too big of a position size. You can't, it's a bunch of things that certain prop firms put onto you to force you to kind of follow their rules, which can be good, but a lot of times it kind of just kills the traders. And honestly, I found a huge problem with that. And that's why I started my own prop firm. My prop firm is completely different than all the other prop firms because I saw the struggle that all of my students were using personally, and just people worldwide, the struggles that they were having to go through with these specific prop firms that are made by random people that don't even understand trading. Like I said, I've been trading for 8 years and I've helped tens of thousands of people learn how to day trade, and I understand what it is to be a day trader. That's why I made a prop firm that is very, very different. Our prop firm allows you to pay that same fee, let's say that $500, and you skip the challenge phase, meaning you don't have to prove to us that you know how to trade. All you have to do is simply pay that $500 fee and follow our rules. Follow our rules, make money. We send you money straight to this is real money straight to your bank account. You get paid out. You can go buy groceries. You can pay your rent. You can do whatever. It's actual real money. But the difference between my prop firm and other people's prop firms that are not traders or don't know really anything about trading except for the prop firm industry is that I don't make you pass a challenge. I make you pay that fee and you get instant access to capital. That way you can trade with it and you follow our rules and you can withdraw that money. And my prop firm is called the Edge Funder. And at the Edge Funder, you can get accounts from $25,000 to $50,000 to $100,000 to up to $150,000. $100,000 account to be able to trade with. And that's all without having to risk your rent money. It's all without having to risk your child's college tuition. You don't have to deposit any of that money, and it works the exact same. If you were to purchase, let's say, the 100K account for $500, and let's say you lose $10,000 on it, you don't owe me $10,000. You don't owe my prop firm $10,000. The only money out of pocket for you guys is the actual purchase amount to purchase that account. And that's the reason I wanted to make my own prop firm, because I wanted to be able to help traders that had a consistent strategy, traders that understood what they were doing, and give them the capital to be able to turn this into a full-time income without having to use up all of their money. So what I'll do is I'll leave a link for my prop firm inside the description down below. And because you've made it this far into the video, I can tell that you are actually a serious trader. So I'm going to give you guys 20% off. You can use code Joovier, capital Joovier, and you'll get 20% off of your new accounts. I made this prop firm specifically for people like you, people who are actually looking to turn trading into a full-time income and not have to stress about risking their rent money or college tuition or groceries or any of that. So if that's interesting to you and you want to be able to leverage my money to make money with your trading, hit the link inside the description down below. So throughout this video, I've said multiple times that having a trading plan and having trading rules is probably one of the most crucial things that you need as a trader. You need something to hold you accountable because, as I mentioned, with day trading, it's just you and a screen. You need something to hold you accountable though. You need basically a boss. So I'm going to show you guys exactly how to create a trading plan. I'm going to tell you guys why a trading plan is so important. And I'm going to help walk you through how to create a personalized trading plan for yourself right now, so you have your boss to hold you accountable as you're starting your trading journey. And that would allow you to avoid a lot of the mistakes that a lot of new traders experience. Being emotional, being impulsive, not having structure, treating trading like it's gambling, or treating trading like it's not a business, just being super sporadic and emotional when it comes to your trading. Having a trading plan is going to stop that. So why is a trading plan so important? Risk management. We've said risk management. I've told you guys about risk management probably 100 times at this point, but having a trading plan helps you have a defined risk management strategy that will help ensure that you don't expose yourself to extreme risk on a single trade or over time. It keeps your risk management in check, allowing you to be able to live to trade another day. The next thing is it helps you with consistency, because it promotes consistency in trading decisions, which is extremely crucial for measuring performance and success over time. You need to get to the point where you're trading like a robot. I've said it 100 times in this video as well. Day trading is all about data. In order to have clean data or good data, we need to be doing the same thing over and over and over again. It's like a scientist. If they're trying to find the cure to freaking cancer or something, right? If they're testing 100 million different things and 100 different variables, they're never going to see, okay, this one's working, this one isn't working. They need to be testing the same exact thing, making small tweaks to it each and every time to see what's working, what's not working. Same thing when it comes to trading. So we need to have consistency by trading the same exact way every single time and trading like a robot. It also helps with logical decision making. Having a well-structured plan reduces the emotional and the impulsive decisions, which helps you make reasonable and logical decisions in trading. One of the two main things that will absolutely kill your profitability when it comes to trading is being emotional and having impulsive decisions. If you are having either of those, you will be giving money back to the market. You will not be consistent with your trading. You will not be able to succeed and become a profitable trader, especially not anytime soon. It also helps with goal setting. So it helps traders to set clear, achievable goals and work consistently towards achieving them. Helps with efficiency because you're streamlining every single aspect of trading. You know exactly what you're doing, when you're doing it. You don't have to think about it. You don't have to stress about it. Helps with your confidence because you know every single time you're entering into the markets and you're going into the markets, you already have a plan. You don't have to guess about anything. It's kind of like the strategy that I just shared with you guys. You know exactly what you're looking for. You know you're not making any decisions until that candlestick closes above that high or that low. So it helps with your confidence by having these solid plans. It helps with your discipline as well because it forces you to be disciplined. It cuts out all the noise because you know exactly what you're doing every single day. Now, let's get into building your trading plan, exactly what's needed in your trading plan. So the first thing is you're going to want to write down and keep in mind all the things that I go over here Write down the questions and then write down the answers, and that will build out your trading plan. So the first question is, what kind of trader are you? Are you a scalper? Are you a swing trader? Are you an intraday trader? Simply what that means, scalpers are usually in and out of trades within like a minute to 5 minutes. They're in and out of trades super, super fast. Swing traders, although they are still day traders, they'll be in a trade for a day or sometimes even 2 days. That's basically what a swing trader is. Now, an intraday trader, they're in and out of a trade during a couple, it could be 5 minutes all the way up to like 2, 3, or 4 hours. So they're not as fast as scalpers, but they're also not holding their trades as long as swing traders. So you want to write down exactly what type of trader you are. Next, you're going to write down what times you're allowed to trade from. The reason why this is so important is because it stops you from just trading randomly. It stops you from, you're on your computer at 7 p.m. playing Warzone and you look over to the side and you see a green candlestick and you're just like, let me just buy right now because I'm bored. You need to treat this like a business. So having a set period of time when you're allowed to trade from, for example, me, I only take trades between 7 a.m. Central Standard Time and 11 a.m. Central Standard Time. Now, that doesn't mean I'm sitting here in front of my desk between those hours, although sometimes I can be. It's just that if a setup happens during that period, I can take it. If a setup happens outside that period, I cannot take it. The next thing you want to write down is what instruments you're allowed to trade. So I know we went over NQ, we went over ES, we went over GC, we went over YM. For new traders, I suggest for you to focus on 1 to 2 pairs. If you can focus on 1 to 2 pairs, it'll allow you to become more consistent and not see too much noise. So just choose what pairs you're allowed to trade with. For instance, let's say you only trade NQ and GC. Just have that written down. That way you're not getting confused or kind of looking at ES or YM knowing that you don't trade that. Next thing is you want to define which strategies you're allowed to use. Now, in this video, we went over one of my strategies that I use. For new traders, I suggest for you to master and stick to 1 or 2 strategies max. I have a lot of strategy videos on my channel that you can go through and look at. There's other YouTube channels that have strategies. There's people's courses and stuff that have strategies. Watch the videos on my channel or anybody else's channel with strategies and see which one sticks out to you. If you like the strategy that I just went over, it's super simple and easy for beginners. Then you could try and master that one. And you can say that that's the only strategy that I use. No matter what, if somebody else's strategy pops up on your YouTube feed and you watch it, don't switch strategies. I make this analogy all the time. You never will master strategies if you're continuously switching from strategy to strategy to strategy. And the analogy that I always give is that imagine you're a basketball player and you had 1 bad week. And you've been working to be a basketball player for 2 years. And that 1 bad week made you want to quit playing basketball and then go want to learn soccer. You basically wasted all those 2 years of learning basketball to then go try and learn baseball or soccer or whatever it is just because you had 1 bad week. It's the same thing with a strategy. You're going to have a bad week. Maybe you would have a bad month, but that doesn't mean you jump and switch strategies. You have to stick to the strategy. That way you can master that strategy. The next thing you want to write down is have set risk management rules, meaning how much money are you going to risk per day? And also how much money are you going to risk per trade? Meaning if you lose more than, let's say, for instance, $500 in a day, you're going to stop trading and you have to wait till tomorrow. Same thing when it comes to how much you're going to risk per trade. If you're like, okay, I'm going to only risk $100 per trade. That means if it goes past negative $100, you have to close the trade out, right? You need to have set risk management rules so that you define exactly when you're going to call it quits and walk away and wait till the next day. That stops you from going on tilt and losing more than you're supposed to lose. You're also going to want to define the max amount of trades you're allowed to take per day. With the strategy that we just went over, we know it's a max of 1 trade per day. But if you're trading any other strategy, you want to make sure that you're not over trading. The point of trading is to take consistent, good setups. You don't want to take every single setup that you see. You want to take the best version of the setup. We call it A+ setups. So you want to define the max amount of trades that you're allowed to take per day, which forces you to not just take every trade that passes you by. You want to take the best setup that has the best percentage opportunity of actually winning. Next thing you're going to want to write down is set clear entry criteria for entering trades. I know we talked about it, the entry criteria for the strategy that we just went over, but if you have any other strategy, have a clear entry criteria. Have a clear checklist for when you're actually able to enter into a trade. That stops you from just randomly entering into trades because you're bored. That's what you need inside of your trading plan and of your trading plan. Sorry. You also want to set rules for trading during news/high volume events. You guys remember in the strategy, I know I keep referring to the strategy we just went over, but it's a perfect analogy. But in that, I said I don't trade until after 9:30 Eastern Standard Time. And that's because that's a high volume event. So in your rules, do you want to have a rule that says you can't trade during high volume event or news events? Or are you allowed to trade during it? That's something that you need to make clear before you're actually entering into trades. And that's for yourself personally. Then also create mental rules for before, during, and after trades. So if you're sad, angry, if you're mad, if your girlfriend just broke up with you, if, God forbid, a loved one of yours got in a car accident or something like that, and it's affecting your mind, trading itself is already a lot psychologically and mentally. If you're already going into it sad or mad or depressed or angry, it's going to make it even harder. So set rules that say, okay, if I'm sad before a trade, I can't get into a trade. Or even your emotions could be affected after a trade. So if you got into a trade and you lost a trade and now you're angry, you shouldn't be able to enter into another trade because now you're not making logical decisions. So set clear mental rules. That's like, if I'm feeling this emotion, if this just happened, or if I got home from work too late and I was super tired, I can't trade that next day because I know my mind won't be right. You know what it is for yourself. So create mental rules for yourself that hold you accountable to being and showing up to the markets in your best mental capacity. You also want to create clear, defined exit strategies. So again, in the strategy that we just went over, when it gets to a 2-to-1, we're exiting our trade. We're okay taking those profits. So have a clear, defined exit strategy, whether it's a risk to reward ratio, because you can go for higher than a 2-to-1. You can go for a 3-to-1, 4-to-1. You can go for a 1.5-to-1, or you can go for dollar amounts. Let's say if it hits $500, you close your trade out. If it hits $1,000, you close your trade out. You just want to have clear, defined exit strategies. And that's for, like we talked about before, your risk, which is your stop loss, and also for your take profit. And then lastly, all these rules are absolutely amazing, but if you have nothing to hold you accountable to it, the rules is just words on a piece of paper. You have to create a consequence for breaking your trading plans and rules. I've said it before. I've helped tens of thousands of people get good at day trading. And this has been the main needle mover to get people to actually follow their trading plans, because believe it or not, losing money is not punishment enough for people. You consistently losing a couple $100 or a couple $1,000, most of the time, the same exact mistake that you made losing that money, you're going to end up making the same exact mistake, because most people, you don't learn by losing money, unfortunately. What I found works best for people is setting a real life consequence, meaning set a consequence that says, okay, if I break any of my trading rules, I have to take a cold shower. Or if I break any of my trading rules, I have to go for a 2-mile run. It's something that you personally hate that would force you to hold yourself accountable to follow every single one of your rules here. Meaning that if you know you can only take 3 trades per day and your finger is hovering over that button to take that 4th trade, you flash back in your mind to the last time you broke your rules and you had to jump into an ice bath. And you realize, I don't want to do that. I'll just wait till tomorrow. That's what helps hold you accountable to these rules, is having a real life consequence. You know you better than I know you. What works good for people that I've helped is ice baths, running. Some people hate running, push-ups. It's up to you. Whatever you would not like to do more than 2 times, that's what your consequence should be. Because after you do it the first time, you should never want to have to do that consequence again, and that should help hold you accountable to following your entire trading plan. All right, so now you have your trading plan. The next steps on your journey to becoming a profitable trader is to actually set up those accounts. Tradeovate and TradingView, you should have those set up. The next step after that is to make sure that you are back testing and testing the strategy. Back testing simply means that you're actually going back and going to previous days and looking for those highs and lows of the London session. Practice drawing up the highs and the lows of the London session. Practice waiting until the candlestick closes above or below it. Practice drawing on those long or short position tools without actually entering into any trades. Just practice it. Get used to actually doing it. That's how you're testing it. And then also while you're testing it, track it. See how many wins you had. See how many losses you had. Track when you entered into each trade. Track the day that you entered into the trade. Because like I said, trading is all about data. So go and test the strategy, practice it out, and also track it. Next steps after that is to actually set up a demo account. I told you guys on Tradeovate, you can actually create a demo account. Instead of pressing that live account button, you can press simulated account and you can go on a demo account. And what I suggest for people to do is to be on a demo account for at least 2 months. The reason being, as I explained to you guys shortly, that in the beginning of my trading journey, I rushed into my trading. I got lucky on a demo account for about a week and I thought I was the next Warren Buffett. The issue was I wasn't. I sucked. But I didn't know that. And I loaded up a live account with $20,000 in it and I instantly blew it. I loaded up another $10,000 to try and make that $20,000 back and I blew that one as well. And I kept doing that until I was in the hole for about $60,000. So I tell everybody now that I help learn how to trade, be on a demo account for at least 1 month, but I suggest 2 months. And during that phase, be practicing that strategy that you're trading in the live markets. It's very, very important that you start on a demo account. After you're on that demo account for at least a month or 2 months, I always suggest for people to then load up a small live account. A small live account is like $200, $300. And how you usually do that, and how I tell people to do that, is load up that small live account with, let's say for this instance, $300, and trade the same exact strategy using just one contract. Trade that strategy, and after 2 weeks, if your account is above $300 or whatever that starting balance was, then put another $100 or $200 into that account. You're not trying to flip this account. You're not trying to flip this $300 to $100 million. You just want it to be above that starting balance after 2 weeks. So if it started at $300, then after 2 weeks, it's at $330. That's great. You made 10% on that account. 10% is great. After the 2 weeks, is at that 330, then put another $100 or $200 into it. So then it'll be at, let's say, $500 account. Do the same thing. Trade that for 2 weeks. If it's above $500, it doesn't have to get to $1,000 or nothing. If it's above $500, it can be at $580. Then load another $100 or $200 in there and keep doing that until the account gets to $1,000. Like I said, you're not flipping this to $1,000. You're putting more money in it and rewarding your profitability every 2 weeks. What this is doing is it's getting you used to trading real live money. And don't look at the amount. Like I said, you're not flipping the account. Don't look at the amount. If it's $500 and after 2 weeks, it's at $550, that's great. You make 10% on your account in 2 weeks. Now, if you go back and remember, we just talked about prop firms, and let's say you had a $100,000 account. If you made 10% on that $100,000 in 2 weeks, you made $10,000 and you get to withdraw $8,000 to $9,000 of that straight to your bank account using the same exact trade that you took with that $500 account where you only made $50, but that $50 was 10% of your entire account. So that's why I say don't worry about the money part. This is all about learning and getting used to actually trading live money. And then after you got to that $1,000, like I said, then that's when you can decide if you're going to fund a live account, a bigger live account, or you're going to go the route of getting a funded account. Once you have that funded account and that live account, use the same exact systems that you've been practicing, use the same exact data that you have to feel confident in your strategy. And that's when the fun starts. That's when you can start generating some consistent profits, paying your rent, buying nice cars, buying nice watches, doing whatever you want, all from the skill that you learned within the matter of a couple weeks, if not a couple of months. So now you have the ultimate beginner's guide to start day trading, from mindset to tools to the strategy that I use every single day. And the truth is, trading isn't about being the smartest person in the room. It's about following a process. It's about staying disciplined, and it's about scaling with the right funding, not having to use your own money. Now, if you want to go deeper and get mentored directly by me and trade live with me, trade live with my other coaches, and even be able to speak with and get help from our trading psychologists, I mentioned to you guys that I'll leave a link for my inner circle inside the description of this video. That's honestly where real traders or serious traders go to get consistently profitable fast. Now, if you want to see a real deep dive into taking the exact same systems that I just taught you to be able to take $500 and use that to generate over $10,000 a month utilizing prop firms, click the video right here. That is the perfect next step to allow you to take the information we just went over and apply that to be able to create actual income. I'll see you right there.